Hello again, another video attempt, hopefully a bit shorter than the last one and with a bit more quality. So I'll try to keep it concise. I'm just gonna chart as I do normally and try to explain the concepts again. So first of all, what I'm trying to do is define the area where the current move is residing. So I start off with hold levels. I won't explain what hold levels are. They are like order blocks, but you can sort of see what I'm doing as I speak. And there's another hold level over here. And straight away what I can see here, I'll just zoom in a bit, is that this hold level goes through that hold level. So the weekly hold level of this one wicks through this one. And that's something I don't like in terms of using this hold level as support. I don't trust it anymore because it's already wicked through, so it's less likely to hold. It may still do on a lower time frame, but I don't tend to keep these in. So I remove only. Or I leave only the holding levels that have been untested or that might be relevant to the current move. So obviously this one has been tested here, and the reason why I leave this in is that on a lower time frame quite often we still see bounces, but at the same time we have to acknowledge that the weekly level has already been hit. So I wouldn't just trust the weekly to hold unless I've got some more information that it may do so. Quite often it depends on the way the chart looks, the architecture or market structure. Right, so we got the hold levels on the lower side, and on the top side we have a hold level over here that's so far keeping this candle down, so it's already wicked through that weekly, and then the move went down again, and it seems to be moving up again. Got another 3 days and 18 hours left, and timing is everything in trading. It's I think still very under appreciated, so it's important to understand the timing when candles close, and that's just wanted to mention that. So we've got the area defined. Now the next thing is cycles. Just wanted to have a quick explanation on that. So price movement, it happens in between holds. I believe there's no doubt about that, it's just simply bouncing up and down between holds. So we got a hold level here. I'll just draw it in, and this is not unique. We always see the some sort of bounce, maybe not on this time frame, maybe lower down, but there's always almost always a bounce off of these hold levels, and it's either from the wick or from the body, and what I tend to do is aim for the body. So even though here it hits the wick perfectly, quite often it does go to the body, and then it's especially on a contract, 20x contract, you're risking too much. So you got to be conservative. You quite often better off to miss the move than to take too much risk. Got to control the risk. So now that we know that the price movement is in between hold levels, we can talk about the cycles. So I like to just quickly draw in a trend, and I do that by looking at at the accumulation candles. The trend is always from the top of the accumulation candle and then its highest point on the chart to the next accumulation candle down, like so, and always the wicks. And again, it's a rather global level, weekly level. I do that in the pink color. Now, now that we know this, this is where the trend was on the 6th of December 2021, and then obviously more action happened. And what should we do with the trend? How do we find the most accurate trend? This is where the term hard closing is important to understand. And as we've defined this trend, we now have to look for hard closes. And basically hard close is quite an easy concept. It's when the body of a accumulation candle is above the trend. So that's, in this particular scenario, that's where the body is above the trend and it's closed. So therefore this hard closes the weekly trend, and it's a weekly candle. And I believe the theory goes that you can only close a weekly trend by a weekly candle hard close. So strictly speaking, if this was a daily hard close and there wasn't an accumulation candle on the weekly, then the weekly trend is still active and may still act as resistance on that larger weekly time frame. And it's an important concept because many traders, especially trying to trade the trend, which is quite often not a good idea, they think there's a breakout, but they don't realize that the candle is still clipping the actual trend, obviously causing havoc. So trend adaption. Now we're on the 20th of December, or let's say even on the 27th of December we start trading again, and we had this trend in. Now we have to adapt it on top of the hard close, like so. And I believe the best way, if you want to understand why this is so, it has to do with the theory of cycles and hold levels. So there's a hold level keeping these 4 candles down. So I won't go in lower time frames, but it may well have been this one. And that's another important concept, that former resistance will or former support will also act as resistance. Now probably on a low time frame there may have been support on here, and then that now acts as resistance. Either way, holds tend to create trends. So we went down, price movement went down, 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 hits a hold level, moves back up, hits a hold level, moves back down, and as soon as it hit this hold level, that's where we got the trend, remember? So hold levels create trend, and then it moves down again, then it hits a hold level here, and that hold level seems to push the price movement through trends and eventually ending up hard closing it. So this trend therefore can then be adapted towards the hard close, like so. And if you don't really trust it, you can also eyeball it. Obviously, you can see that it's pretty much seems to act as a trend, and it's an experience thing as well. But I would be very confident in thinking that this is the accurate weekly trend, and then on a lower time frame you can trend adapt it again on hard closes. So but right now we've got a hard close here, so I could trend adapt it here, and then another hard close there, and then there's a hard close here. So this, in my opinion, would be the correct weekly trend. And as you can see here, there is a blue candle above the weekly trend, but that's not a hard close. It has to be an accumulation candle. and as you can see, the weekly still acts as a barrier. Despite the price movement being all the way up here, it's still moving down. And if you're on a daily, you might see we can do that for the sake of the exercise. Yeah, we see some hard closes over here. So despite it being hard closed on the daily, it didn't on the weekly. So therefore the weekly trend is still active, but the daily trend, if this was the correct daily, would have been hard closed now, and we could do two things. We could leave the weekly in here and just be aware that there's a hard close on the daily, so that there is a daily trend up here, like so. And then there's another hard close over here. So yeah, that is the daily trend. And if it's not too messy, you could leave these in, and you get a bit of an idea of where the trends are, and that the weekly needs to be closed and the daily. And these are both active trends that may act as walls on that particular time frame. Right, so going back to the weekly, we've got this trend defined now, and the other part of the theory of drawing correct trends is that trends flow out of trends. So we've got this what I would call a weekly or global trend, and then there is a or legacy trend, I should say, and then from the legacy there is a global trend flowing out, again from accumulation candle to accumulation candle, like so. This one hasn't hard closed yet. We've got 3 days and 18 hours left for the hard close, but if it would have hard closed, if it would have closed now, then this would have been a hard close, and you get a trend adaption. And straight away that allows you to visualize the future in some respects. Obviously 3 days is a long time, but on a lower time frame you can already see trends evolve, and you can sort of build up a picture of what may happen in the future. So for now this is the weekly trend. It's not telling us very much, other than that it may function as a support over here, but that would be like 15,000. I don't expect a $5,000 drop, but I guess you never know on Bitcoin. That defines the upper trends. The lower trends are like so, and again it's just the opposite thing. You now look for blue candles, distribution candles, and you look at the bottom side, the bottom wicks, and again trend adaption where necessary if there's any hard closes. So this is a legacy. I'll make that pink. This one is global. So you got the legacy here, the pink one, and then it flows out the global, and then on the lower time frame you have a local. And it's important to see this because once a local trend breaks, it attacks the next. It's trying to attack the next trend. So in this case the global, and then if the global breaks, it will attempt to break the legacy. Right. That's it for trends. And apart from the fact that I should put this trend in, which is actually the legacy. So apologies. Again, I just draw the two bottom blue ones. Strictly speaking, I should go like this, connect the first two, and then I look at hard closes, and then I trend adapt it all the way down. I've done this millions of times, so I know that this was the trend, and I know that this was a hard close, sorry, this was the trend and this was the hard close. So either way, I'm just doing this quickly, otherwise we sit here for ages, but this should be the correct trend anyway. And again, it's not very relevant at the moment, unless we expect the trend, the price movement to go to 17,700 or so. So that's it for trends. We've talked about hold levels, we've talked about cycles. So as a trader, what is important to understand is that all the cycles, they are the same on and it's fractally relevant. So we see this move down, eventually it hits the perfect, it hits a hold that is strong enough to carry the move through the trend. And as a trader, you ideally want to make, you want to find the perfect entry. So always buy on hold levels and always be greedy. And with greedy I mean, if you have like a ton of hold levels to choose from, you probably should be choosing the most greedy one. So if there's only like a if for instance here you have the weekly, and there could be a daily here, and then maybe down here you have the last few holds holding up the move, like a 50-minute or 3-minute. My initial thoughts would be to aim for the lowest time frame holds, or whichever hold is the lowest, to keep up the move. As long as you don't hit the bottom of the how do you say this, the break level is what it's called. So as long as you don't hit the break level, you're still laddering up. So if there's like a 1-minute or 3-minute hold, which is even a 5-minute hold or 50-minute hold might be lower than a 1-minute hold, so that's why you work from high time frame down. You gotta make sure that you draw in at least the absolute lowest possible hold, keeping the move up. And we'll see some examples of that in a bit. So let's get rid of this. In this scenario, apparently the perfect hold level that is keeping the move up was around about here. Let's get the magnet tool off, so somewhere down here. And believe it or not, but very often you're actually able to pinpoint the exact area that the big money is entering, is likely to target. And that very much depends on previous action of the hold levels, what it was laddering off of, and market structure. So we're looking for perfect entries, because if you're entering perfectly, you have all the largest chance of getting out of the trade with without losses. So you're basically free rolling, and that's the idea. Especially on contract trading, you don't want to you want to minimize your losses as much as possible. So you gotta have these perfect entries, which is also what would allow you to set lower risk stop losses if you're getting confident in your entries. Right, so this hold level, and I'll just go back and draw the trend in that was relevant at that time, which was this one. So we hit the perfect hold level, and we don't know, as I said, that this is probably a daily or 4-hourly on a lower time frame. There may have been greedier holds, which I would have gone for, and then I would have missed this move, which is a shame. But then again, that's it's not a big deal. We can always try and find a next point up and you'll see in a bit that quite often it becomes very obvious which one to go for. So we've got a downtrend, and the only way to get an uptrend is to hit a hold level, and that is strong enough to push you through a trend, hard closes it, and then slowly is forming an uptrend again. So in this scenario, what we see is we hit the hold level, we move up, and this creates a trend. So we got a trend from there to there. So again, you see the hold level formed the trend, and from there we get the breakout of the trend, a hard close, which fuels the move up. And again, it hits a hold level here, which forms a trend probably over here. So you got this trend was there, and then eventually price moves down again, hits a hold level, and again, I hope it's clear, but this would be the next trend, acting as a wall, and apparently carries through the price movement to the next hold, which is probably this one, keeping that one down, and then again forming a trend, a daily trend. If you remember, we went down a time frame and we noticed a hard close here, and that formed the daily trend. But the weekly trend is only hard closed here, so that's where we put the weekly. I hope that kind of makes sense. You probably have to watch this another 5 times. But it's an important concept to get right, because the trend accuracy, if you get it right, it's amazing stuff, because combined with hold levels, you can really find very good entry points. Right, so as I said, the trick is to find the perfect entry. Once you've got the perfect entry, you'll then well, hopefully break the trend. There's no guarantees of breaking the trend. I mean, 90 out of 20 times the trend doesn't break, so you gotta treat it carefully. But on a lower time frame, you can start to see trends form. As I said, lower holds will be created, low time frame holds that will create trends, and those trends and lower holds will act as a shield to your trade. So once you've hit this perfect entry, you'll see the price probably linger around a little bit, hold levels get created, trends get created, and if it's taking too long, and depending on what the risk level is, you may decide to get out, or if you see shields form, so you see a 1 minute hold form, 3 minute hold that is keeping the move from dropping down, it's holding the move on the 1 minute or the 3 minute. As long as those haven't been hit or haven't been hard closed, you're still in the trade. If you start to hard close your shields, that's where you'll be triggered to get out of the trade. And again, on a weekly, this is all theoretical and perhaps a bit hard to visualize, but we'll see in a bit on a lower time frame that this is how it works. Right, so yeah, that's a thing on cycle. So the move is continuously cycling, and as long as you hit holds and you don't hit break levels, you can't, you might have an uptrend here, but your overall trend will continue to go down, and it's a way to see failure in the move. So well, let's go here. This one is already hit, so we can remove it. I just wanted to show you that this is the break level on the weekly. Let's put the magnet tool on. There you go. So this is a this is the top of a valley, and what we need to understand is that if you hit this perfect entry, breaks the trend, once it's broken the trend, there's only two things that will happen. It will either target a hold level, which it did in this case. This hold level got targeted and then it dropped down, or it will go for the break level, and if it goes for the break level, there's it's basically trying to break the move, and once it hits the break level, that's where you stop laddering down. Only if you actually hit the break level, you stop laddering down, and it's pretty logical, because if you stop here on a hold level, that's holding the move down, and even if you have a trend like so, let's say there was like a 1 minute hold keeping the move from hitting that break level, you are still laddering down. So even this is a trend, downtrend, so to speak. And it's good to understand this, because as said, it will visualize what is happening with the move. And if you see a weekly close all of a sudden, that's generally quite a big event, because that clearly indicates a potential move reversal in the future. Now that's all I wanted to say on that. I'll just remove the irrelevant part of the charts. Let's see how we're doing for time. Probably already quite a few minutes in. 27 minutes, yeah, okay. So we've discussed trend accuracy, trend adaption, hold levels. We've discussed cycles. Now we can go and discuss the another important thing. It's more to do with market structure. It's called origin levels, and basically those are all of the concepts that I tend to use for my trades. Origin level is simply a valley or a top, so in this case a top, closing off. Remember what I said, that if it doesn't hit the valley, you're still laddering up. But this one did hit the valley, so you're not laddering up from these points anymore. So if this was your original base point for your trend, it wasn't. I think it was. It's more likely this one. Then you'd no, disregard that. Depends on where you are in the where you look at the base point, obviously, but from the how you say that, generally with all the tops and the valleys, as long as you don't hit the top on that specific the base of the top, the break point, the break level, I should say. Confusing the hell out of you now. As long as you don't hit the break level, you're still laddering up. That's the message I was trying to convey. So just like I said previously, if it doesn't hit the break level, you're laddering up in this scenario, and if it does hit the break level, you stop laddering up, and it resets itself, so to speak. So from this point onwards, you bounce up again, and then you have to see if this is laddering up, and it doesn't. It hits it again, and then again it hits it again. So it's not laddering up, and even here similarly, it's hitting that point, and it never actually ladders up anymore. It's just bouncing off of that level. Now this one, if you see this, if you see the top closing off and then bounce up again, that's an indication of a origin level. And I tend to dash these lines. They're important part of the market structure, because if you lose such a big important level, you get a it's a bit like a polarity point. It's either gonna hold or it's gonna lose the move, and if it's losing the move, you plummet down to earth basically, and you lose this by hard closing it. So I think there's probably been a daily hard close, and that was enough to crash. Daily or 4 hourly hard close, that was enough to crash the market. So you see these origin levels on all time frames, and some say they are quite good entry points. Obviously they would have been here and here to make some nice return, and what you often see is that especially after such a strong move down, you tend to see traders or bots go for these levels to enter. The tricky part of that is that quite often, you don't see it here, quite often you see some massive wicks, and you see it go through, you see target a hold level down here, for instance. Sometimes there's a very obvious 1 hourly hold, and what I like to do, if I was to trade this, I tend to always go for hold levels, and I tend to go for the wick that hits that hold level, so then I enjoy the bounce back up rather than aiming for the origin level exactly. The other thing to do is to just wait and eyeball whatever happens. You might miss the move, but if you see it go below it, quite often it doesn't go more than 0.5%. So if you can get an entry on 0.4 or 0.35 with a stop loss of 0.20 or so, you're probably doing quite, you might get a good trade out of it. But don't take that for financial advice. But it's it's how I would play it, and as you see, it doesn't always. Let's see what I mean. This was a massive wick, and obviously on the weekly you do tend to get that, because it's a larger move that is happening, and it's a larger event. So I do believe that as the bigger the origin, so the larger time frame you're on, the bigger the wicks you can expect. This is insane, like 14% you would have been stopped out entirely, and that's the tricky part. But on the other end, we've already seen it hit three times, so even after the third time, I'd be a bit wary of trying to buy this. So the more times you hit this stuff, the bigger the likelihood that it will break. So I would have never bought this bit. What I would have done is try to, if I had visualized this and I was over here, I would have tried to short this, and then try to enjoy the breakout of this important level, which was probably in hindsight quite logical to see. At the time I didn't see it, but I guess talking about this stuff, you do tend to see these things quicker in the moment, and and as I said, this is clearly a first indication of a failure of the move, because this hold is holding the move down, and we never get to see a touch of the break level. And similarly, the same thing happened here. So you get several indications already that this move is trending down, and as long as you don't have an indication of valleys hitting on dailies or 4 hourly trends, it's probably still worth worth it to keep in mind that the trend remains bearish until you have an indication that otherwise. Right. So this is going to be a long video again. It's just too much to cover, really. But yeah, it's good to understand these origin levels. Strictly speaking, I think they are defined by the I should have done this. The the hard close of a downtrend. So if we're talking about a top, this is the trend down on the weekly, and this hard close over here defines the fact that this becomes a, let's see if I can do this correctly now. It basically comes down to the fact that you need a hard close of a trend to in order to be assured that this is an origin level. On the weekly it's not that obvious, but this pullback over here might have already been enough, because I think you may have to take this trend. So you got this legacy trend, and then from there flows out the global trend, and that one got hard closed, and this hard close is what defines the fact that this break level now becomes a origin level, because you got this hard close. If this didn't hard close, then we may still break this break level, and it won't act as a origin level. It's important to know, because if you obviously that would break the move, and you'd be going down fast over here. But understanding that this now becomes an origin level, it allows you to find entry points on the next on the third or the fourth bounce. Right, that's enough of that. I'll just continue down now. So we've defined the area of the weekly. Now my focus is mainly on this area. This I don't think this one is applicable, so I removed that. I removed those. So now off to the daily, and I'm just doing the same sequence. I draw in the hold levels that I think are relevant. So there's a hold level over here, and now we're on the daily, so I use red. But notice this wick, we've already wicked it through, so I'm inclined to remove this. There might be a lower time frame hold still relevant on here, but yeah, I don't trust this one. Remove that. Are there any other lower time frame dailies? There's a hold over here, but notice that this one, yeah, it's like I said before, this is also the hold level of the daily, and this one as well. So you see that this one just got missed, the body just got missed, so I probably would have missed the trade, but this did wick the top wick. So it's as to whether a daily is tested, it's you have to look at the wicks. So this daily got tested, so I don't trust it anymore. And again, this daily is already tested as well by this one, so I don't trust it to hold anymore. And that's another important concept in here. If this is the range being defined, so if this is the if this is the break level, the daily, and this is the another daily, this the break level of the top, the daily top, then I would define our current range in between these levels, basically. And yeah, so that's our arena to play in. And So we've drawn the daily levels in. I'm looking for origin levels now, and now let's let's stick to the this one isn't relevant. I'll just remove that. Let's stick to the plan. So we go for hold levels, then I draw in trend lines. Now normally trends flow out from globals or legacies. This is a legacy, so there's a global that I had drawn in, the blue one, and now I'm just trend adapting it to here. I've done that before, so I know this is the current move. So this is the current trend, and I make that blue. That's a global trend, and then let's see. Draw the trend in from here to here, and I'm kind of eyeballing it now, but it's this probably is the correct hard close, and I guess that's just an experience thing that you can kind of eyeball it rather than going through the motions of hard closing, and especially going down time frames, it becomes very obvious what the correct trend is. Now this would be the local. So we've got a global here and then a local, and just go back, and sometimes you do have to do this. You have to sort of move in between time frames just to double check that you didn't screw things up. I don't know why I made this blue. This should be pink. Then from there, that's the legacy, and from that point onwards a global flows out on the weekly, and as you can see, the green one, that's the daily. There we go. So yeah, the green one is the more accurate one. Flows from the daily down here, and yeah, I should just do it like this. Clearly I'm not good enough. Let's see. So I would say this is the correct daily trend, and I find that the more accurate one, the more useful one, so I remove the weekly global, and this is the I might be confusing you with the terms now, but just remember, we go from global to from legacy to global to local. Right. Now that's the daily holds levels defined. There's not any being relevant at the moment, and we've defined our arena to be in between these break levels. Basically, that's part of the plan. Now going down to the 4 hourly, and I don't see any origin levels, so I won't bother with those. I'll go down to the 4 hourly again, starting off with the hold levels, and this is an interesting one, because starting off within our arena, we can sort of see what has happened in the past. So hold levels here. This one is an origin level. I'll do that in a bit. So it's a valley, 4 hour valley that is being hit. So the break level is hit, and then it's dropping down again, hard closing the trend. Therefore, this becomes a origin level, and well, I suppose a bit out of sequence, but since we've discussed it, I'll just draw it in. That's the 4 hourly origin level, and notice how it's never come back to it. So it's a potential sign of failure, but it's also a sign that we might be heading up towards this point, and yeah, could be a good area to start putting some shorts in. Right, so next thing that happened was this 4 hourly hold got hit, So it's got hit, and then it's got hit again and again, and it seems to it held the move down again. And yeah, that's so it's clearly laddering down from that point of view. But what I like you to take away, if you didn't already notice, is that we see this 4 hourly holding the move down, or maybe some hold up here, maybe a 1 hourly. But again, we've got a 4 hourly here, and we see it being touched almost perfectly, and it's holding the move down, and there's probably a 1 hourly in here, and then there's a 4 hourly in there holding this move down. And I'd be inclined, because this despite it wicking through, once I see this happen, so we see a 4 hourly holding the move down, and we saw this happen here. This 4 hourly held the move down. This 4 hourly was held by this 4 hourly. What fairly often happens on all time frames, if you see twice that a particular time frame holds the move down, I'm inclined to take the third one and short that. So it's quite often that's yeah, it's a reasonably safe bet, especially on the low time frame. So if you have like two 15-minute holds already holding each other off, then the third one is probably a good time to get in, especially as you are also backed up by trend quite often. Right, so in this particular scenario would have been a good short. Obviously no guarantees, but you'd be surprised how often this works. And yeah, we see this move down, and even here on the fourth time now, and that's, you see this very often, the ladder happens on the same time frame. So again, this 4 hour was a perfect entry for the fourth time. Yeah, so with this massive wick going up though, would I have been confident to take this trade? Probably not. I would have gone for a very greedy hold level. I probably would have missed the move, but that's no issue. I mean, you only have to hit it once or twice. These are massive moves. If you hit them once or twice a month, that's you could get a nice return from that. But yeah, let's have a look. So that's a 4 hourly, and then we get down to this 4 hourly that is hasn't been hit from below, basically. So it's being hit from above, but I can already draw this in for the yeah. Let's say the move drops down, then this 4 hourly will act as a resistance or a 4 hourly hold. No more holds otherwise, so this is there's no 4 hour holds keeping the move down at the moment, except for this one, but yeah, we're above it. And vice versa, if we quickly do the same, this was a 4 hourly that got hit to the T, then this 4 hourly, well, it sort of wicked through, a bit messy, but this 4 hourly was held very nicely. Again, it wicked through a little bit, but it's clearly being held. This move is clearly being held by the 4 hourly, and then going up there, we're laddering up. So we realize that it's laddering on both sides off of the 4 hourly, and also you see that it's worth paying attention to whatever happens on top. Quite often also happens on the bottom. So it's just worth, not always of course, but it's worth keeping in mind that whatever happens on top, you might want to look at on the bottom. Now this 4 hourly hasn't been touched yet, so this could be an interesting point to enter on. but at the same time we're already sort of wedging in, and the smaller the movements become, the less likely I'm inclined to try and trade a breakout, because it's becoming more risky. Mind you, these moves are still 4%, so yeah, I might still go for that. But it's just, you gotta bear in mind that as the move goes smaller and smaller, and holds are being hit, as we see, most 4-hour holds have already been hit. And we'll see what happens, what happened on the lower time frame, if there's any 1-hour hold left or 50-minute holds. And yeah, at some stage the move becomes rather risky, and yeah, trying to trade breakout or second guess where we're going, it's not it's sometimes a recipe for disaster. So if you want to trade breakout, you rather be in the move right here versus trying to buy it here. Because if you're down here, you bought it, you get a free roll to break trend, basically. Yeah, that's it. So we've got 4-hour here, and now our move is sort of defined in between these 4-hour holds. And yeah, this one is already hit, so I remove that. And the trends, obviously, it seems to now sort of go over the trend. Perhaps back test this, so it's already done so, and then perhaps I'm inclined to say that it's trying to go after this hold, which is already hit. So if yeah, we'll have to see if there's any lower time frame hold that might keep the move down. And what I haven't done is draw this trend. So we got this trend up here, up here. We seem to sort of break below that 4-hourly now. It's a bit hard to see. I'll just zoom in a bit. Yeah, it's definitely clipping that one. So we don't have a hard close on the 4-hourly, but yeah. So if this hard closes on the 1-hourly, we may see a push down, and it might be targeting this area. And we've got the weekly here. We know that's already hit a few times, but it may still wick down there, and then this 4-hourly might hold. Yeah, that's but I won't make any again, it's not an exact science. We can only try and find the best entry point with the lowest amount of risk and the best possible outcome, really. So we've done the 4-hourly. Are there any origin levels on the 4-hourly that are relevant to this move? And straight away I can, again, this is just practice, I guess. I can see a top value here, go up, hit that, notice how it bounces back up, and then we have a trend down here, and this is a hard close of that trend for this one. So therefore this is a origin level. And as you can see, it doesn't bounce off of here. It's a very strong move, and then it sort of completely disregards it. We've got a couple of hits here and here, so it's definitely a point of interest. You can see it wick, then it bounces off again, but this is not the typical behavior I would expect from a origin level, basically. But yeah, such is life. Most of the times you do see that typical behavior. I'm just trying to see if I can find a more, and as you realize, I still struggle to sometimes find the correct 4-hourly origin level, but this one is definitely it, and this is the typical behavior I expect. So you get this one, a pullback, hard close of the trend, therefore this becomes an origin level, and then you see these bounces. It never hard closes above it, drops down again, And because we've hit it quite a few times, I wouldn't be surprised to if we hard close this trend, to eventually see a rip up, right, completely disregarding the origin level now, targeting this one and then pulling back again, then yeah, maybe go back to this target, the trend hold level, keeping the move up, and then target this again. Yeah, unless we never get there, of course, and then maybe we yeah, maybe there's a smaller time frame that we haven't time frame hold that we haven't realized yet, that wasn't touched, that may keep the whole move down. Yeah, so that would be a good point to enter then, if we think that may happen. Right, so so we got the hold levels in, the origin levels, and it's starting to become a bit messy already. And but I think it's reasonably clear that the current move is sort of residing in between this these two weekly holds at the moment, and bouncing up and down between hold levels, and then finding its way either up or down. And there's no 4-hour holds other than this one keeping the move up. So going down to the 1 hour, starting off here, we've got this 1 hour that got back tested here and or here. This is probably a lower time frame that got held off. All these holds have been hit already. This one hasn't been hit, so I'll draw that one in. That's a 1 hourly untouched level. And next one down, this is the 1 hourly, but it's also 4 hourly, so I just leave that in. And then we've got this backside, but that's already hit. This 1 hourly got hit here, and this backside often also holds the move up and gives a rather rapid response. So if you look at hold levels, this is the left leg of the valley. So the left leg is further in the past, and generally the idea is that backside holds, so these ones on the backside of the leg rather. So a backside hold is tends to give more violent bounces. So they bounce up, then a new trend gets created, and then eventually you'll go down to the front side hold. You can't see any here, but this is in a lower time frame. You'll find like daily holds over here, that front side daily holds that will try and they have the characteristics of carrying the price movement through trend. So and they are less they have less steep responses, so less of a fast bounce, unless you hit a polarity point. So that's the looking for the word. No, I can't think of the word, sorry. So let's have a look. So we got the trends in. There's a trend over here as well, a 1 hourly trend, like so. Maybe this one. Yeah, so that's a 1 hourly. I wouldn't trust that, so I'll just remove that. We got a global trend over here, which I believe is the 4 hourly, and as you can see on the 1 hourly, we've got hard closes of that. So we could trend adapt this to overlap with these, the 1 hourlies, and all you're doing is defining the 1 hourly trend, But remember, the 4-hourly trend is also still active, and we haven't hard closed it yet. So it might be worth keeping it in and just eyeballing the 1-hourly. But do understand that we've already moved the 4-hourly, or how do you say it? These hard closes indicate that the 4-hourly is already moving down, so that there is a 1-hourly here already, and maybe next one around we could see a 15-minute and a 5-minute, and if you see that happen on the bottom or on the top, that's an indication of yeah, especially if it happens on one side. If you see that trend going from 1-hourly to 15 to 5, hard closing, and then it becomes a fragile area because the trend is about to be lost, and then you see a massive dump or a massive climb. And quite often you see it happen on one side rather than on both sides, and then it becomes quite obvious to which direction the overall move is going. Right, so again, hold levels on the 1-hourly. Let's have a look. I'm just going down from, these have already been hit. I'm just going through it quickly now. This one got hit and this one didn't get hit. And remember what I was saying, that as soon as you kind of see the 1-hourly being held off from the 1-hourly, I'm getting quite interested to potentially trying to short this, especially when there's a third one already indicating that it's stopping from the 1-hourly. Don't know if that makes sense, but yeah. Right, so again, I'd be looking for what has happened in the past. This is definitely a hold level I'd be interested in, but I'd also be looking at lower time frames just to confirm that. And there's a 1-hourly untested over here, and this one was already tested here. Yep. This 1-hourly got tested, this one hasn't yet. So, but it's not, there's a bit of a mess in, it's not a clean blue candle. There's one here and then there's another one wicking there. So again, I'd be more inclined to find greedier levels if I was to short it. And that depends on whether you think the move is going up or down. If you're in an overall uptrend, I'd be a bit careful trying to short it. Right, so there's still a 1-hourly over here and there that might keep the move down. We have a 4-hourly here, but that was already hit, so I can remove that. So yeah, so the 1-hourly, that 1-hourly might keep the move down. And then on the bottom side again, it's, as you see, it's quite a lot of work, but you get quite fast in doing this stuff if you practice it. There's no 1-hourlies left, so we have this 4-hourly over here. Then I go to the to check on origin levels on the 1-hourly, see if it's there's any obvious ones. So here, this one was a 1-hourly. But as you see, the 4 hours seems more relevant to the move, so I don't tend to draw this one in. And lower down, so you got the bottom here. This is a origin level, so you can see wicks through, but it's still holding and then it moves back up again. So this might be a point of interest in the future where it may bounce again. So we could even see this drop down here and then pull back up and then break trend and then go up. So I have a very greedy outlook, or pessimistic I should say. I always think that, or maybe it's optimistic, I always think that the move eventually will try and find the outer edges, because that's generally where people get nervous and where people put stop losses. So they it seems to be happening very often. So it's really good to stay greedy. Don't necessarily put in too many trades unless you get very confident on lower time frames and scalping. But otherwise, I would just wait for the greedy levels. Any other 1 hourlies I can see? Maybe this one. This one was. I'm not sure if this doesn't actually hard close it. I don't think so. I won't bother with that one. Yeah. Well, I might miss some, but you get the drift. It's important to take the time to try and find these origin levels, because they'll be relevant to whether you think, like for instance here there's a 1 hourly hold origin level that I found here, and you see it bounce off of it, and then again it wicks massively through, but it still holds that origin level, goes below it, and again you see this bounce over here. Quite often you see this, it's you get some experience with it, then you see this break out, then the price drops back again, and quite often you see the origin level being back tested, and that would be a reasonable entry, I think. To I'm not saying that this would be a good entry, but sometimes you see these very obvious spots, like even here you see it back test exactly on top of that origin and then go back up again, and you see this very often. Right, so if you're shorting here, sometimes an origin level is good to understand that it's there, because you will see a bounce off of it, and you can then try and figure out if and it's never easy, but you can try and figure out if it's holding the move down. And we are now on how many minutes? Where am I looking? 1 hour and 7. So yeah, I'm wrapping this up. So we've gone down to the 1 hourly, the relevant moves, and here we go. Here's a origin level as well, and I always go to the left and see if I haven't missed anything. There is, yeah, this is a origin level, I think. And notice how I picked this point. I could have picked this one as well. This is also a origin level, 1 hourly. So there's several ones. You see this bounce, hit, then it goes up to the second origin level, goes back up again, then it respects this origin level, bounce back up to that one. Yeah, it's not exact science, but it definitely seems to work like that. So I'd like to understand if what you guys call this, and yeah, and this is sort of what I was mentioning. If you know there's an origin level here and there's a nice clean 1 hourly, if you were to trade that origin level, and I'm not saying that's a good idea, but you could try, and my advice would be to sort of try and get an entry with a hold level, because quite often it seems to target that and then it drops down again, rather than trying to figure out or second guess whether it will hold the origin level. Yeah, so that's it. Again, it's getting quite messy, so but I can sort of I can still see what's going on at the moment, and the story tells us that there's a trend line here as well. It's a local trend line, so you can draw local trend lines anywhere really. They exist everywhere, so they don't necessarily have to flow out of global legacy trends, from global trends. Yeah, so we got this, seems to be trying to hard close it, but we still have like 31 minutes left on the 1 hourly, and there's no more 1 hour holds here. And as you can see, if we do have a important trend here, so let's say this was a 4 hourly and then there's a 1 hourly here, we can kind of see what I was mentioning, that this is a 1 hourly hard close, and then maybe if you go down to the 50 minute, we see that this is a 50 minute. So we see that this trend is already moving down from 1 hourly to 50 minute to 5 minutes, and it's an indication of the move potentially breaking down again. And once you're down to the 1 minute or 3 minute, and then the trend hard closes, quite often you see it plummet down. So my, and it's a guess of course, but I'm inclined to say that price will probably end up here again. Having said that, just looking at the market structure again of the origin levels, you do see 1, 2, 3, 4, 5. It's really trying to go for it. Yeah, it's a tough one. I'm not so sure, to be honest. You've got this hold, this hold. This might be a good point to short and have a go at it. Let me know what you think. So going down to the 15 minutes. Yeah, as I said, there's a hard close on the 15 minutes. So here we go. And then there's another hard close here, which yeah, I mean this trend line is getting quite fragile now. It's moved down quite a few times now. And now on the 15 minute we can sort of see what was going, what I mentioned before, that you quite often see 15 minute ladder, then ladder down. I mean this one wicked through a bit, but it's holding off from either the weekly or a smaller time frame hold. But then again the backside 15 minutes was held, then this 15 minutes got hold off from that 15 minute. So yeah, it's this 1 hourly coincides with the 15 minute. Yeah, so I might be inclined to go short on that. I'm now a bit late, but yeah, I would consider shorting this. But then again, I'm now in a typically rushed position. I am FOMOing because in a way I want to short this now. I've got this sort of confirmation that the 50 minutes seems to be holding off, and I said to myself, well, it might well go down to 19498. So but what have I missed? You know, it's like I could go short now and it's probably a good short, but what have I missed? And I really try to hold myself off from rushing into a trade like this. And we've got this trend over here. This was an hourly trend and it's hard closed as well. And similarly, as we spoke about this trend moving down, this trend seems to be moving up. And we do seem we got 12 minutes left. Yeah, that means that it's still still got 12 minutes to move down. So I'm kind of liking it more now, but I haven't actually looked at the 5 minute holds yet, and the 3 minutes holds, and the 1 minute holds. So So I'd be going down to the 3 minute and the 1 minute holds. And also, what you shouldn't forget is that these origin levels quite often act as magnets, I guess. So very often they do try to wick this. So yeah, that sometimes complicates things. Yeah. So see what happens. It might wick this and then drop down and respect that 15 minute, which I kind of expected. But at the same time, we may already have a 5 minute close, and we may see, and this is the concept I struggle with a little bit. So we have this 1 hour trend, which is really this trend, yeah. And in 25 minutes, this will hard close the 1 hourly trend. On the 15 minutes rather, we've already seen a hard close, which is why we trend adapted it. And we're now going for another 15 minutes. So, but at the same time, the 1 hourly trend hasn't been hard closed yet. So, yeah, I think it would be reasonable to assume that this hold level may keep the move down as it did with all these points. Drop it down back in here, then go after that one. So I would quickly go for 5 minute holds, and notice how the 5 minute got hit to the T here, and this 5 minute held this one down as well, and this 5 minute. So similarly to the 50 minute, the 5 minute seems to have been respected, and then that's what would have changed my opinion on the 15 minute. I'd be more inclined to be greedy and go for the 5 minute. So I would have seen that this was a untested hold, and obviously it's already happened now. But I can promise you that this is how I would trade. I would look for the greedier holds, and I would also look for the fact that they have been holding off in the past, and it seems to have really helped the 5 minute nicely. And this would have been a short for me, I think. I would have been quite happy with that. But I would still, if I had time, I think my idea should really be. I'm talking to myself now. Is not to rush into trade. So really, I should wait to have drawn in all the hold levels down to the 1 minute, and I straight away see all the 3 minutes have been hit already, except for this one, which is see that this one here, which coincides with the original level. This 3 minute was was respected. So it dropped down, and now this would be quite good to do. Now straight away we're looking for. So let's say I took this trade and noticed that the 1 minute was even higher. So I would have gone for this 1 minute untested, and that would have been my entry. There's a 1 minute here as well, but the backside 1 minute got tested. So this 1 minute wasn't touched yet, and now it depends for me. Notice that this is only like 20%, 0.2%. So this would eventually, ultimately, be my decision point. I could go for this 1 minute, but at the same time, I know this backside got hit, so therefore I would be inclined to go for this one, and then set a stop loss that covers these points. So I'll probably set 0.20%, and I would have bought on the 20422. And what quite often happens is that it front runs it a bit, or even here the wick is not that far off, so I would just trade the wick in this case. So I would probably have set 20418 or something, or 117, and that would have been my short with a 0.20% stop loss. And I think that is a pretty safe bet to make based off of the architecture of the move. And now I'd be eyeballing it, because obviously even if you took this trade, it would have been perfect entry, and that's so you're straight away in profits, but at the same time no guarantees that it won't go to the 204 for free. And yeah, I mean, this is what I find the hard part, is do you let it go all the way up here and then move back, and if so, why didn't you just be greedy? Why weren't you greedier? And that should come down to calculating the odds of things happening, I guess, and the potential profits missed if if the price doesn't hit this. I guess the answer is you can't always wait for the most greedy points, because otherwise you probably miss too many moves. And at the same time, the architecture tells us that this could be a really good short opportunity because of the backside holding this move off. And it's just an experience thing that it does tend to happen quite often in this scenario, that yeah, a short is probably a good idea, and then allow it to hit this. You'd be in a bit of a loss, but I think I'd be okay with that, considering the fact that this is the most greediest point. So if it does pull back, we're in for a nice piece of profit. Well, things are not turning out as expected yet, or at least that's not right. I mean, this happens. You get a pullback, and then it's not falling down as fast as I hoped. Now it may go for this one and then pull back, but what I wanted to say is that whilst you're waiting for the drop, as you expect this to be a polarity point, and really this is the latest polarity point, then you see the 1 minute hold being defined that acts as a shield. So if you get below that, you have a bit of a safe guard against your trade. Obviously we never got there. We never actually got a shield to protect us from climbing up. And now we're sort of losing our well, profits. And this is where you I mean, this does happen every now and again, that you get the perfect entry, goes down, and then it hits it again. And this is what I find quite hard, because you don't have the shields here anymore, but you know that this also sometimes happens. So sometimes you get the twice the bounce before it drops, and I guess this is an experience thing. Do you let it go? Do you allow it to go up here? Is that a smart thing to do? I honestly don't really have the answer. And I think that's where I probably lose a bit of money, but being unsure about it, maybe if you go for, well, let's see that there's a shield build up here now, 1 minute one, and you could decide to use that shield as a way of getting out of the trade. And we wait for a trend to form. There's not really a 1 minute trend yet, and the longer this takes, and especially if you think it's really risky, if on a polarity point you tend to want to see a strong pullback. If you don't see that happen, then after a few minutes you may want to decide that this move is not going the way you want it, and then you pull out. For now it seems to be alright. It's too early to say, but then you go to the 3 minute one, and you see a 3 minute hold, acting as a shield. So you put that in, and you're hoping that the trend will be created. And now, as I speak, I am really ashamed, or not ashamed, I say it, disappointed that I didn't take the trade. But hey, it may still turn around. So yeah, that's it. Worst case scenario, you do hit this and then go and hit your stop loss and you lose 6%. But if we look at and that's why you don't really want to rush into these things. We haven't actually spoken about what the target is, and as you know, notice there's so much data to take into account in a single trade. You want to be sure that you've taken the time to take it all aboard, on board. Make sure you haven't missed anything, and then you take the trade. Now, where do I expect this move to go? On a larger time frame, we've mentioned that this 4 hourly is untested and might be a point of interest, especially since we've been bouncing between 4 hourlies. So I wouldn't be surprised if we get down to that point. This trend line is a point of interest, so we might hit this backside and then go down, and then yeah, so I think I'm inclined to think that let's say you took that short from here, that this, so I'll just go for the 15-minute. There's a 50-minute here, but it's a bit messy. Yeah, it's interesting. Yeah, I made a mistake of being zoomed into too much, basically. But let's see what that orange one is. Let's get rid of that. Oh yeah, this is what confused me. This is we were above this one. But yeah, target would be 19498 if it ever gets there, obviously. But that's on a larger time frame, and then it depends on how confident you are in that move. Yeah, so I think I quite like that short. It might not. It now looks like it may be turning around, but I think either this one or that 1 minute would have been a reasonable short to take. Greedy is always more comfortable, because you know that this is the absolute polarity point. So just going for that one and missing the trade is often the right choice, because it minimizes the chance of loss, and you have less hard decisions to make. At the same time, yeah, if you always go for those 1 minute most greediest points, and you disregard some of the market structure, which is really basically telling you to take this one, then you might get a bit frustrated as well, because you tend to miss the moves too often. Now this polarity point seems to have not been respected, or sorry, now it's still being respected. It's now going for the 1 minute hold. That's our shield, so we kind of expect it to hit that, and let's see what what happens next then. And we had a trend form 1 minute, which is hard closed, like so. And now I'm becoming a little bit less optimistic, but remember, as long as we haven't hard closed above it, this still acts as a shield, and yeah, it's never easy. I mean, it's always, you always have a hard choice to make. You either either in the beginning you're trying to second guess whether this is breaking out above, or oh, here we go. Yep. Well, that's it. And at the same time, trying to once you are in profits, trying to take profits is just as hard, really, because taking profits too early is as big a mistake as taking no profits. Right. So again, it has gone for that polarity point or the origin level, and it's always in hindsight, I guess. I could argue that well, I said that this acts as a magnet, so perhaps you should always be aiming for that. And it's now pulling back. Let's see what happens. If this goes, if we lose that, then I think. Let's have a look. Yeah, the basically the theory says that if you break out of this origin level, you hard close it, then you're likely to target this origin level, which is a rather large move. It's about 1.20%. You could try and trade that, but it's tricky, of course, because you don't know how far it will wick this origin level before going down. I still think I'm still inclined to think that this is going to drop us down. So 9 minutes to close the yellow candle, and then this acts as a 1 hourly shield as well for the move up. But either way, if we stuck to our stop loss and we didn't panic, we would still be in the trade, and yeah, we may now see a nice pullback. And notice that this is also a break level. Here. And also the 15 minutes, this is quite a large move, so we might actually just pull back off of this valley, and this is what I missed. And realizing this would have been even a stronger indication for me to take this short, basically, so, or this short, the one we took, or the one at the origin level. And so we allow it to go down. Now my understanding is that you shouldn't be moving your stop loss until you hit your target. So let's say if your target was here, conservatively, if I wanted to, this is a hold level that wasn't hit yet, this wasn't the hold level, we've gone through that. I'd be inclined to go for this, but I would use trend as well as a trigger point. And let's see what the profits would have been for that. About 0.40%. That would not have been enough for me to take the trade. So again, I missed that information. If I had known this information, I probably wouldn't have shorted this. But obviously, I'm probably looking too interior. It's so tricky, you know. It's I keep getting confused with this one. The larger move is over here, of course. So yeah, I would still be taking the trade, and the target would be on a larger time frame. I'm looking to basically break this hold, and we've already mentioned that this hold was moving down, trending down, and it won't take much to break this, I don't think. Because it's already in a fragile area of the move. So yeah, we're looking. So if I take that into account, zoom out, we know that all these 1 hourlies already have been hit. So there's only 15-minute holds that may keep us from arriving here, I guess. And yeah, I would be quite bold in waiting all the way down here or down here. But I use the trends as a trigger point to get out. Now it looks like move is going up again. Seems to be quite a strong move, and at the same time we have to keep watching. Sometimes you need 3 sets of eyes to keep track of it all. But at the same time, now that we're above this, and as the longer we are above trend, the more likely it is that eventually we'll be going up. It's pretty logical, of course, but if we know this trend is a 1 hourly, so in 5 minutes this 1 hourly hard closes, closes, but it's not hard closing the 1 hourly trend. But this is the 1 hourly trend. Yeah, it would be hard closing the 1 hourly, and if that happens, then this trend is closed, and we might actually see a massive move up. It's a tough one. We'll see what happens. But so this is the 1 hourly trend, and I trend adapted it on the 15-minute. So I believe this was the hard close. I moved it over here, like so. But this is why it's sometimes important to keep the 1 hourly in and not always trend adapt, because sometimes you miss out an important part of the move, or you miss out the fact that you're about to close a 1 hourly trend. And now that I see this action, we're still in sort of in profits, or just are we in profits? Let's have a look. Where did we take the trade? Now this was the hold. No, we're not in profits. So we're probably -1 or -$2, with commission probably -10 or so. Yeah, I think at this stage that if I know that the 1 hourly is closing, what could I do with that information? I could set the stop loss a bit lower, but overall I think it's a hard one. I think we're already above this 1 minute. We're still below this one. And we've already hit this origin level several times, so we are sort of targeting to break it. I'm inclined to probably get out of this trade, but I find it quite hard. I'm not sure. I think this piece of information is very important, that the 1 hourly is looking to close, to hard close. Well, we'll see. So I'll wait for 2 minutes. If that hard closes, where can we expect it to go? Well, there's no normally if the trend hard closes, it's looking to attack the top of the break level, or the break level here. But also, as soon as we hard close this origin level, we're looking for a large move to attack the next origin level up, and then yeah, we've got a wick over here that might indicate an origin level in the past. So 20903 might be a good initial target, and yeah, we'll see. I suppose what you could do is rather than just getting out of the trade based off of the fact that the 1 hourly is about to close, you can try and see if there's any shields left in the trade or in any trends. So you got this trend over here, it's still being respected, but really there's nothing up here that's holding the move, and there's a trend over here like so, and really all of this time you're right on the borderline of trying to of either closing this trend or initiating your long way down. My inclination is because of that 1 hourly about to be closing, maybe it was never a good idea to get in, and we missed that part of the information. So yeah, we'll see. We're now in the trade. We probably made the mistake of getting in the trade in the first place, and that's why it's so important to analyze your trades, figure out if you could have done that better, and why did you miss that information of the 1 hourly. I should have known that this was the case, and perhaps I should have taken a bit more time to figure out if we're trending upwards or not. So yeah, still a lot of improvements to be made, but that's how I trade. By sort of giving live commentary, I learn a lot, so sorry for dragging on this video. Feel free to ignore all I'm saying. Well, it would be nice to see a nice drop now, and on the other end, if it does drop, that's sort of, I mean, you've got like 40 seconds in the trade left. Oh, it's already closed off, sorry. Yeah, so we got the hourly closed. Yeah, now we've got this 1 hour here. This 1 hour will now be respected as well, and that would be my target. So sorry, this one here, that would keep the move up. So 20402, and yeah, I would probably take that as a target now to get out of the trade. But at the same time, on the 1 minute, yeah, I'd be getting out now. So this would be this would be it. I wouldn't. We hard closed this 1 minute. So yeah, that's it. A few dollars lost, I guess, but and overall mistake made due to missing out the 1 hourly closing off, hard close of the trend, and yeah, that's probably my my only comment on that, criticism of my own doing, and that's it. Let me know what you think of this this trade. How would you have done it differently? Would you have stayed in and just allow it to go for the stop loss? Because yeah, as you see now, it's dropping down, and that's yeah, it just shows I've still got a bit of a way to go, I guess, as to figuring out why I would have gotten out of the trade here if I expected this one to hold. And why wouldn't I allow it to touch it twice as I did with the other one? Yeah, many questions. I still think this is breaking up though, but yeah, especially because also with the 1 hourly, we've got this hit several times already. So 1, 2, 3, 4, 5. Yeah. And by realizing that the 1 hourly would close the trend, we would have also realized that at best this 1 hourly would have been the target. So bollocks. So yeah, that's it's only like 0.20%. Yeah, I hate my trades more and more now. So okay, that's it. That's a wrap. Let me know what you think, and thanks for listening.